Hi everyone, it's Matt. So in this video, what I wanted to cover off on was the IRS's views as it relates to cryptocurrencies. So in 2020, it's been no secret, right? Cryptocurrencies has been on an absolute tear, especially since October, and especially as it relates to Bitcoin. Bitcoin is currently trading at over $20,000. It's been a significant run up, and there's lots and lots of people out there who are trying to get on that train. Okay, and then there's other people that are basically trying to get off the train and lock in some of the gains that they have basically had over the last 12 months or so.
Is anyone else getting flashbacks to 2017? That was the last time we saw this kind of price action in Bitcoin. Now, back then, there was a mad rush into crypto just before the bubble burst and Bitcoin plummeted to 3,000.
So in this video, it's very important to understand what the IRS's perspective as it relates to all of this. Because if we are not careful with what IRS's requirements are, and if we do not have the appropriate documentation to support a lot of that, then we run the risk of potentially being charged with tax evasion, which has got its own penalties associated with it. For example, tax evasion has criminal penalties, it's got fines, and then in very extreme situations, there is also the risk of imprisonment. So we want to be careful of that. It's important to understand what the requirements are from a tax perspective as it relates to these cryptos. So what I thought I'd do is spend a couple of minutes just talking about, well, why has cryptocurrencies had this significant run-up in 2020? So there's many reasons for this, but I basically put this into 4 buckets. The first reason is the government's been printing money. There's no secret associated with this, and the government has basically printed trillions and trillions of dollars as a part of various programs to support businesses and individuals. Now the problem is, or the downside is, when you print so much money, is you eventually got to pay it back. That's one thing. And the second thing is it usually drives inflation. And there's a school of thought that says that, hey, we're going to have some inflation. And what happens with inflation is the US dollar basically becomes devalued. So you need a hedge, right? You need a hedge so you can basically counter the drop in the US dollar's value. And previously what people used to go towards is gold, right? Gold used to be an effective hedge to the dollar. But now what we're learning is gold doesn't have the same amount of strength as what it did before, and cryptocurrency seems to be taking the place of that hedge and that place of safety compared to where gold used to be in the past. So that's causing a run-up in Bitcoin prices, right? So what's happening really is there's a finite amount of Bitcoin. You cannot have more Bitcoin like how you can have with currency, right? The Fed can publish more currency, but you cannot like have more Bitcoin. There's a finite amount of Bitcoin that is in circulation. Demand and supply is what drives the price of Bitcoin. And that's why it's got that level of perceived stability associated with it. And that's why people feel like it's an effective hedge against inflation. And that's what's driving prices. So that's one reason why. The second reason why I would say that cryptocurrencies has had this run up over the last several months here is because there's increased adoption. There's companies like PayPal and Square that have effectively said that, hey, we're going to go out and buy a ton of cryptocurrency and then utilize that as in their money transferring platforms. And what it does is when you have big companies like that, and now you also have banks and financial institutions entering this particular game, it legitimizes the cryptocurrency market. And what it also does is it drives up its value. So the other reason for this, in terms of legitimizing it, is some of the words that Jerome Powell has used, which is where he said that cryptocurrencies could exist in an environment with paper currencies, and they can essentially work together. So another reason why it's legitimized cryptocurrencies, and that has happened more recently, but it's a significant change-up than what was perceived in the market back in 2017. So in addition to these 2 reasons, right, there's other reasons as well. So for example, there are more and more vendors out there who are accepting cryptocurrencies as a form of payment. And as long as you have more companies or vendors accepting this form of payment, it, again, further legitimizes it, right? So now you have PayPal, Square utilizing it as a form of payment. You have vendors accepting it as a form of payment. And that's what makes this currency even more real, right? That's yet another reason for the drive up in prices. And I would say the 4th reason around what's causing this drive up in prices is, to be very frank with you, it's just fear of missing out, FOMO. So there's people who are trying to get on this train because they've seen this run up and are now chasing the market. It's a very common phenomenon. It happens with just about everything. So now when you have people chasing the market, all it's doing is it's creating more and more and more demand for cryptocurrency, and there's going to be an increase in prices. Bitcoin has by far taken the role of being the dominant player in the cryptocurrency market, and that's why you're realizing most of these gains as it relates to Bitcoin specifically in the cryptocurrency game. Now, there's lots of other cryptos out there, right? There's Ethereum, there's Litecoin, there's a bunch of these things out there, but they've not all experienced the same amount of run-up as what we've had with Bitcoin. There are several naysayers to Bitcoin as well, and cryptocurrencies in general, right? One of the biggest voices around it from a naysayer perspective is Warren Buffett, right? He doesn't necessarily understand it or the value associated with it. But anyway, I'm not going to go into that into a significant amount of detail, because the objective of this video is not to talk about what is my opinion as it relates to the Bitcoin market. I want to keep this video more focused on the tax component. Back to the original point, right? When we talk about IRS and rules, what IRS is being very clear about at this point is they want in. Okay, they want in on the game and the gains associated with cryptocurrency this year. So what they're doing is they're making some pretty specific rules, and they want to know and how much people have engaged with in this whole cryptocurrency game. So now what they're doing is on the 1040, they're including some very specific verbiage that basically talks about people's level of engagement related to the cryptocurrencies. So some of the specific wording that you'll see on the very top of the 1040 in the upcoming months is as follows. It'll say, at any time in 2020 did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Select yes or no. And if you did any of this activity, you better disclose yes. And an exchange, for all intents and purposes, could involve a buy as well, right? So if you bought something with crypto dollars, that absolutely counts as an exchange. So you need to be very careful and affirmatively disclose that you were involved in this cryptocurrency game. If the IRS did find out and you selected no in that bucket for whatever reason, then you could be prosecuted for tax evasion. And that comes with its own myriad of penalties that we've talked about, including criminal prosecution fines, penalties, imprisonment, in extreme cases as well. So the IRS is only concerned about three main things, okay? They're interested in your cost basis, they're interested in your holding period, and they're interested in your fair market value of the crypto purchase. So the biggest hurdle that you're going to face is this holding period, and in terms of assessing what that is. One of the challenges, or which you're going to see as it relates to the cryptocurrency exchanges, is some of those holding periods are not properly documented. It's not a very robust marketplace, right? It's not like trading stocks and bonds and things like that, where you can get statements directly from Vanguard or Fidelity or Ameritrade or any of your other brokerage spaces. You're trading on cryptocurrency exchanges which are not fully built out to provide this level of transparency as it relates to your holding period. So if you're not going to get that information from the exchanges, what the IRS expects is the individuals to maintain appropriate records to be able to disclose those positions. So why is holding period so important from an IRS perspective? Well, there's really two reasons, right? It really has to do with the differences in tax treatment. There's two treatments you can get. You can get long-term capital gains treatment, and you can get ordinary income treatment. So capital gains is capped at 20% currently, right? So if you have held Bitcoin or any cryptocurrency for an excess of a year, then you're basically treated as long-term capital gains. Long-term capital gains, as I mentioned, at 20%. If you have held cryptocurrency for a shorter duration than that, then it is actually treated as ordinary income. And ordinary income on the high end can be taxed at 37%. So there's a significant discrepancy between the 20 and the 37%, and the IRS absolutely wants to get line of sight into it. So that's all it is, right? So it's a matter of documentation and holding. So whether you've been in the crypto game for a while, it's important to now ensure that you have appropriate documentation to support your positions and the gain loss thereof. And if you're now an individual who's looking to enter the crypto game, it's important for you as well to get line of sight into what type of documentation you may need in the future. So if you like the contents of this video, smash the like button. Obviously leave some comments down there as well, because I'd love to hear about people and their opinions about the future of cryptocurrency. There's also a subscribe button. Please select that as well, and ring the bell. That way you'll be notified as I create any future videos. Thanks again, and I'll see you soon.